In this video, I am going to share with you some of the fundamentals between residential property and commercial property. There are many fundamentals, but I am going to cover you at least few in this webinar. So if you want to see, if you want to know, then just stick around. Okay, so the first fundamental difference between residential property and the commercial property is the outgoing. What do you mean by outgoings? It means all the expenses that you pay. So if you buy a residential property, you know that your outgoings are your all the expenses such as land tax, such as your rates, your insurance, your property management fees, or any other accounting fees, any other expenses that you have. Now these are called outgoings. The difference between residential and commercial is that the commercial property rents are plus outgoings and the residential properties are minus outgoings. It means that when you buy a residential property and rent it out, then you get the rent which is called the gross rent, means that as a landlord you have to pay all these outgoings. On the other side, in the commercial property, if you buy, then all these outgoings will be paid by the tenant, which is why the rent is plus outgoings. And this is a significant difference. It can boost your cash flow significantly. So think about that. If two properties, one is residential, another one is the commercial, and exactly giving the same amount of rent, one is plus outgoings, another one is minus outgoings, means the commercial property is plus outgoings, means it is going to give you more money into your bank account as compared to the residential property, even though it is the same rent. So let's say 500 per week, which is like a $25,000 rent in a year for a residential property versus $25,000 net rent in a commercial property. You will get that whole $25,000 for commercial property, but for residential property you will not get the $25,000. You have to deduct all your expenses and then it will be there probably $10 or $12 or $14,000. So that's the difference. Outgoings is the biggest difference between commercial property and the residential property. Next big fundamental difference between residential and commercial is residential property rent is without GST and the commercial property is plus GST. Now let me explain why it does matter. Because in residential property, when you buy and then you rent it out and then you collect rent, it is only the rent that comes in. There is no GST component. Because there is no GST component, then the management fees or other insurance fees, everything that you pay from your pocket, then those charges also has GST component. Those GST component gets deducted from your rent because there is no GST that you are collecting. So because you cannot offset the GST amount also paid from your rent amount, and that means you get less. Your expense become more. On the other side, in a commercial property, if any of this expense that you have to pay, remember those GST component of those expenses will get offset against the commercial rent that you collect. So giving an example, let's say if you collect a $50,000 net rent plus GST, so actually the tenant or your tenant is going to give you 50,000 plus 5,000, which is the 10% GST as part of the total rent. So you will get 55,000. And now of course that 5,000 GST you collect, if there is no other expenses, then you need to pay back to the ATO as form of BAS statements that you have to do. But what I am saying is that if you have any expenses, that expense GST will be covered or would be paid up against those GST. So you do not have to pay back whole of GST. The expense that you are making, the GST component of that expense will get offset against the GST that you are collecting. Because of that, your expense will be less as compared to residential property, which is why you get to keep more money in commercial property than the residential property. And the third fundamental risk that I would like to talk about is the risk. Residential property right now is high risk versus commercial property is low risk. Let me explain what I mean by high risk. When you buy a residential property, it's not only about the property risk. Perhaps the property risk is low, but what the overall risk is high because that you are buying a negative gearing or negative cash flow property. So you are dependent on your personal income. And 6 months, 1 year down the line, 2 years down the line, God forbid, if something happens to your job and you just market downturn, whatever, and you have to take 6 months or 1 year off from the job, then your property is in danger because you have a negative cash flow and now you have to feed that money from somewhere, and if you don't have that job you are putting a lot of pressure. So that's why it is becoming a high risk. On the other side, in a commercial property is low risk because it is a positive cash flow property, so it's not dependent on your job. Because if it is not dependent on your job, whether you do and if you take 6 months 1 year off, the commercial property itself is not risky at all because it has a tenant, it is tenanted and it is giving you high cash flow, it is giving you income, you are paying the mortgage from there, and even after paying the mortgage you get to keep more money in the bank account, which is why it is positive cash flow. Because it is positive cash flow, it is low risk. On the other side, on the residential property, if it is a negative cash flow, it is always high risk, and high risk not only about the property, the overall your circumstances, it become a high risk. These are the fundamentals that I like to discuss this in this video. If you have any other and if you contradict with any of things, by all means put in the comments below. I would like to hear your opinion about that, what you believe the difference between residential and commercial property. Thank you so much for watching, and I will see you next time.